EU trade surplus. Really? Do you think that's more important than the Greek talks? A lot of sideways action. Yeah, if you bought super low or sold super high, you're fine. Right in the middle, no so good. Well, anyways, welcome to today's session. It's the 15th of June, 2015. It's a Monday. That means we got to go through the routine. Today we're going to cover the event calendar to look at the event risks throughout the trading week. And but we'll start with the commitment of traders report. We'll also do some technical analysis looking for swing trade setups. How's that sound? Sounds like a lovely Monday to me. Let's get going. Now let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, good or bad, never predicts future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Okay, all right. So let me fire up my drawing tool. Got to go through the routine, man. The routine is the work. And the work keeps everything balanced and focused. Hang on. I have Trade the News talking in the background. I have 18 screens open, or 18 screens with maybe 100 browser windows open. I can't find where it is to shut it up. Oh, there it is. There it is. All right, that should be better. Okay, got the drawing tool going. Good, nice. Okay, so what we're looking at is the Commitment of Traders report. And this is a report from the Commodities Futures and Trading Commission, CFTC. And if you are a large institutional investor, let's say like a hedge fund or other, you must report. And the way that you report changes where your information goes. So for example, if you are actually a commercial hedger, so for example, let's say you're in the wheat market and you're buying and selling, hundreds of millions of dollars worth of bushels of wheat, but you're using that wheat. You're actually going to take delivery, or you're hedging your exposure to the actual physical market. Therefore, what happens is you report your positions that's required by law to the CFTC to say, hey, we're in these particular positions. Whether it's long or short, it doesn't matter. But if you actually are in the market as a hedger, this changes things like how you're taxed and stuff, for example, because you're in it to protect your position. You're not in it to make money. So, so if you're a commercial hedger, you get put down on the report in one column. And if you're in it to speculate, you're in another column. And then from all of that, they can see what the total volume of trading is and then subtract those that didn't report, because obviously if they didn't report, they're not in large positions, and so you can tell if they're, basically dumb money, big money, hedgers, so on and so forth. So what we're looking at is for those large institutional positions that are from non-hedgers. So if they're long euro futures contracts, they are out there buying euro to make money. Okay? You get it? Now, if they were a hedger, they would already have a whole bunch of euro, and they're worried about the value of the euro going down, so they would be short, but they're hedging their already long cash position using a futures contract. You get it? So what we want to know is who's in the market to make money, and what direction are they going? Are they going up or are they going down? And that's what this report is. Isn't it pretty? So this is published at forex.today. Feel free to use it. Yeah. All right, so euro. First thing you want to look at is who's long euro. What's the trend in being long euro? And has there been a dramatic change in trend? And it's like flat to just slightly up, but nothing dramatic. We'll call that flat. No, right? And then there's this area, so the long, okay? Now here's the short we want to look at. What's the trend? The trend's been down. What's going on here? Less people short. Slight increase in people going long. Dramatic, or not dramatic, but definitely a decrease in those that are short. What does that tell us? Kind of sideways. There isn't a clear trend, really. So anyways, what you look at here is the net, which is, you know, adding longs and shorts together. And you can see there are less people short. That's all. Nobody's really going long. Some people are getting out of their shorts. So what does that mean in price? Well, price is in red here. And remember, even though it's Monday, this is as of Tuesday's close from last week. And this data was released Friday at the end of trading. So it's pretty relevant. And you can see there's a bit of an increase in price. That's what the red is. Okay. Yes, it's produced and released, I think, what, 4 p.m. every Friday, I believe. Okay. So it's fairly relevant, and that's, you know, since that's when it's released, that, you know, it's new. Now, obviously, we're trading, you know, 15-minute candles, so we think of last Tuesday as being a million years ago. But to a lot of institutional investors, you know, last Tuesday was not that long ago. Meaning, are the positions today the same? No. All I can tell you is that was the positions in the market reported to the CFTC at the end of at the close of trading on Tuesday. Okay? That's all I can tell you. What it is today, things have probably changed, but, you know, is any of this data going to put you into a trade today? Like, oh, did you see that COT? Oh, man, I just got to be short. No, come on, man. This is for long-term trends. So if you've watched some of these COT reviews that we've done in the past, we've seen where there's been like a dramatic increase in the price of the Euro USD and less people shorting and nobody longing. Okay? So there was no bulls in the market, but many of the bears were getting out. Since price had already tanked for like 6 months straight, we could surmise a couple of things. One, even though price is going up now, there's no bulls. And therefore, two, the reason it's going up is the short traders are taking their profit and exiting the market. You see what I mean? But nobody's bullish. Nobody on the planet's bullish. There was no increase in long positions, and there were hardly any to begin with. So basically, if you want to dumb it down, nobody on the planet was long Euro USD, but Euro USD was going up. But nobody was long. Well, I think that's very useful information. Because we can then, have the hypotheses of sometime in the future, when Euro USD goes too high, according to some market participants, there's a reasonable potential for the people that shorted 6 months ago and made a ton of money, they might want to short it again. Or even though Euro USD is going up, you don't necessarily want to buy it. Okay? All these things I think are important. So we're assessing the trend. No, Mark says, do limit orders go in that report? Why would they go in the report? Think of this, Mark. I could put in a limit order for 1 trillion US dollars. Do you think it should go in the report? No. So it's not in the report. It's not money. Right? When I was on the trading floor for the 10-year T-note, it was interesting. I was talking to one of the traders there, and he was showing me his trading terminal and stuff. We were looking at the order flow, because that's basically what they're looking at, is the order flow coming in and out. And he's like, see all these orders down here? They're all fake. He says almost all the trading now is fake. I'm like, what do you mean? He's like, it's all high frequency trading. So he says, you might want to trade. He said the old school guys would trade down into those orders, and then the orders would get triggered, and then they would bounce off those orders, or the orders would carry them to the next level, whatever the situation was, right? He says now what happens is 1/100th of a penny away, right? So let's say 1 pip away, even though the market's fallen all the way to those orders, it's even fractional of a pip, right? 1/10 of 1 pip away for the 10-year, all those orders disappear. It just goes, it's all gone. None of them actually existed. It was the computers lying. So there were really no orders really to begin with. They were placed with no intention of ever being executed. Now, if you're unfamiliar with high frequency trading, it's really changed the world of equities. What happens now is they'll have these algorithms in the high frequency trading system that might say, if, let's say, 2/3 of the stock in the S&P 500 are positive today, buy every stock at once, and they'll just buy every share of the S&P 500 stock, because they'll know 83% of the time it'll go up that day. But what'll happen is they'll be in and out of the trades before, they might move a million, no, I guess I can't move a million shares, but let's say 10,000 shares of a stock in 1/2 of 1 second. So every time, so what they're doing is, there's a feeding frenzy for the market today. Everything seems to be going up that should be going up, and basically they're going in and out of the orders before you even see it. So imagine if you were doing this in Forex, and you were truly a scalper in this case, where you earned 1/4 of a pip, but on 100 lots. And it was 1 tick. It just went tick. Now, if you're watching a 1-minute chart, you wouldn't even see it. So if you're trading 15-minute charts and hourly charts, you wouldn't have even noticed that anything happened. But they were able to get in and out in a quarter of a penny, but times, $100 million. But they might do that 1,000 times in a day as well. Or they'll wait that, let's say you want to buy Apple stock, and you say, buy Apple stock, and because they have zero latency and they're plugged right into the exchanges, what happens is you say, buy Apple stock, the broker says, okay, here's your order, this is what you paid for your Apple stock. What you didn't know is 5 times between the time you click buy and the 1 second later that your broker gave you your entry, someone bought Apple 5 times and then sold it to you. So they go, here it is. And you didn't even notice. No, they can't do that in Forex, no. But it's an interesting gig. I don't know how I got on that, I'm sorry. So here's the Great British Pound. Great British Pound. Okay. Price went up, but had been in a downtrend. No real change, just slightly what? There's less people long and just a tiny bit more people short. So that would probably indicate like more of a British pound downtone, kind of like, right? More people short, less people long. And a trend, 1, 2, 3, a one month of less people long. Now, let me show you why this is important. Like, let's move it over here. Let's go to the pig dog, pound dollar. Where is it? What am I doing? Why can't I see it? Euro dollar. It's down here. I don't know why it's down there. All right. So pound had been going up. I think we could agree to that on a higher time frame. Okay. So now we're looking at less people long and more people short. And this was of Tuesday of last week. So now, what do you think we should do when we're in this area? We mark this up differently. Guess we can go even farther back, right? Let's do it that way. Okay. Maybe, just maybe, we get a rollover here. If so, okay. So the reason I'm saying that is currently over the last month or so, even though price has been going up for a week and a half, 2 weeks, it was stable for a week and then went up for a week. We now have a 618, I'm guessing, let me draw it. All right, exactly, 618 Fibonacci retracement. We have a roll reversal. And we have an oscillator potential change of direction. Okay. And we know from the Commitment of Traders report, not many people are buying it. Right. Again, the gray line are people buying the British pound. 1 week down, 2 weeks down, 3 weeks down. So for 3 weeks, less people are long, less and less and less people long, and yet price was going up. Sounds like a divergence to me, right? So what happens if suddenly, if less people are going long, what if we get an increase in people going short? Then this sucker would fall. So maybe that's that's what we should be watching, right? Maybe that's what Commitment of Traders report helps us do. Maybe, just maybe, we do that. Okay, that's all. That's how you put it together. It's not going to put you into a trade, but you say, nobody. We've had 4 weeks in a row of nobody buying. In fact, less people buying. Less and less bulls, yet price is going up. That's odd. I wonder if there's some resistance. I wonder if we get a reversal pattern. I wonder, and you start putting together a trade plan. You likey? Here, I'll Facebook this for you. Aight. Okay, that's the pig. Yen yen. All right, so what's going on here? Market is getting heavy, heavy, heavy net short Japanese yen. Amazing, huh? Okay. Lots and lots and lots and lots. I'm looking at the sort of the golden line. Lots of people are short. Less and less people long, but at such a degree, like a huge move up, just a flat move here. Well, I don't want to read too much into it, but at the moment it kind of feels like too far too fast, but I got to be a little careful. But the market's short, man, right? This is the net. And it's quite a dramatic move. Well, it's a month ago, Mark, so depending on the Karuta speech you're talking about, but are you talking about the one of last week? Well, either way, we're still talking about last month. Okay. Yep. But you're like, yeah, so it's probably even more dramatic now, but all right. Oops. Let's take a look. Aussie. Did you hear about the RBA? They said the Aussie probably is justifiably worth less than it is now. It's another great trading week. Yes, net meaning add up all the longs, add up all the shorts. Okay? So for example, we're at the Aussie, and the market's essentially neutral, right? Just slightly bearish. Just slightly bearish. But technically it's net short because it's below the zero line. Okay, there are more people short than there are people long. Right. Yeah, so Ron, if you remember back when we're at 119 on the USD I said for various reasons, I said don't be surprised if we go to 125, which would have been a 7 or 8 year high, and it did. Like 3 weeks later, we're at 125. And so you would see, you know, people were actually, it's not that they were getting out of yen, they were shorting it. They were getting, right? There's a bit of a difference. Getting out means they were long and they're exiting. Well, in many cases, they're not getting out, they're just shorting. Right? Well, if net is down, they are out, right? No, not necessarily. They might just be in short. But yes, what it means is there's more bears than bulls. Another way of saying it. Okay? Right. Well, is it collected Tuesday? No, well, it's compiled Tuesday. I believe it's collected every day. Okay? We got to be careful with our language here. I believe it's reported at the end of every day, the large positions. And then the weekly report is compiled as of Tuesday at the close of trading. They gather up all the information at that time, and they compile it into a report and make it available to the public on the CFT website at 4 p.m. New York time on Friday. Okay? We might have been talking about the Kuroda speech. So look, guys, so when I say last month, pay attention. Each one of these dots is a week. That's last Tuesday. There's the Tuesday before. There's the Tuesday before that. There's the Tuesday before that. Consider that 1 month. Yes, it's only, the Commodities Futures Trading Commission is only gathering information on the futures trading in the United States. Okay? So that's why if you guys look here, these are dates down here. This is June, May, April, March. Okay. So anyways, Aussie, oi. Long positions in light gray. Not much going on here, just slight. Short positions in gold. Much more dramatic increases in shorts. Very few people going long. And, you know, over the last couple of weeks, dramatically more people short than before. Very little change net-wise. Price was down here like 77 and something. So we just touched 77.50 in the real-time market. I just saw it, which is actually a right below yesterday's high. And there was a discussion out of the RBA today saying that the Aussie is probably worth less than it is now. So I might be selling it later. I might add to that short, let's say. Okay, but right now kind of neutral. Kiwi. Okay, you tell me. This is the trend short contracts. This is the trend in long contracts. Seems pretty bearish, huh? Therefore, the actual net is this. The market is heavily short Kiwi. And now we also know that they've cut interest rates. Ken asks, are there COT data on other things like coffee and sugar and wheat and soybean meal? And absolutely. I just don't cover it. All right, so Igor says, we've looked at four currencies, everybody's short. Well, extrapolate. If they're all short those currencies, what are they long? There you go. Dollar. These are futures contracts. Are U.S. futures contracts priced in rubles? Baht? Renminbi? Peso? Rupee? Or U.S. dollar? Yeah, shekels? Zloty? Yeah, U.S. dollars. Okay. Okay, kitty cat. Slight increase here, slight decrease here. But if you look over the trend over the last few weeks, couple of weeks, down, 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 and a blaze. It's up today. It just touched the 4 hour 55. I'm also looking at the daily Stokes on the USD CAD does say up. The 4 hour 4 hour was on the 55, but we'll have to look at it later. But the daily says up on USD kitty CAD. And that's what this says. So if the market for 2 weeks, was way, net short, what that means is they're long USD CAD. And the daily oscillator is suggesting that maybe we should get up on that. Cool. So let's look at the event risk for the week. Oh, hang on, wrong one. I don't know how that happened. There we go. Must have clicked on something. Aight. So, Aight Chihuahua, let me 3-star this sucker. Lots of great central bank news this week. Awesome. Okay, let me highlight those before I highlight anything else, because everything else is just sort of noise. Well, speaking about noise, Greek news is going to go up and down, up and down, up and down. Okay, whatever. All right, Aussie median minutes, huge for the Aussie. Okay, and they're already setting out rumors that the Aussie dollar is worth less than it is. So I might look for hardcore resistance and then look for opportunities to sell. Okay? And this is going to be early in the week, right? So sooner would be better than later. Okay? Skip, 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 skip. And then you got PC median minutes out of the Bank of England. Awesome. Okay? Then FOMC. Everything is awesome. Okay? So this is the Fed raising interest rates. But more likely it's the Fed giving people that wanted interest rates going up today, that day, for it to go up in September. So I don't know. The press conference is going to be big. FOMC is not going to raise interest rates, but they're going to give those that want interest rates to go up a little bit of hope on the press conference. Awesome. Okay, moving along. Swiss National Bank press conference and their monetary policy statement. Yeah. Awesome. Everything is awesome. Okay. Skipping along here, like all this other stuff's good, like core CPI of the U.S., Philly Fed, it's all good. I'm not dissing it, right? I'm not dissing the Aussies on their GDP. It's just not nearly as relevant as all this other stuff. How about this? Bank of Japan. Everything is awesome. It's like, yeah. Okay. Now remember, I was suggesting, maybe a week or so after the FOMC, summer will start. So all of this is important, right? You see how important this is going into the summer? People have to get through all this news before they start slowing down, right? I mean, look at that right there. Aussie, pound, US dollar, Swiss franc, Japanese yen. And do you think Greece is going to be kicked out of the Eurozone this week? No. Yeah. So, so be careful. That's all I'm saying. Be careful. Because it could be one of these situations where you're in a trade, and then for no real apparent reason, boom, it moves. And some idiot somewhere said something stupid. And then if you're the idiot, then what happens is you jump on the big move because it's spiked and you don't know why, but you're like, look at that big candle. And you do that, and then some other idiot comes over and says, no, the first idiot said something stupid, and there's no way that's true. And then, boom, it swings back the other way, and if you're one of the idiots, then you threw your money away because it's going to come right back and you'll get slaughtered. Right? Remember, if you don't have the reason, if you don't have a clear reason to be a bull, or if you don't have a clear reason to be a bear, then you're simply a pig. So if you're in a pig trade, because you're a pig trader with a pig plan, with your nose stuck in the mud, well, you get slaughtered. Yeah, and I don't mean the Great British Pig, but I think you get it, right? I hope. So this other stuff is good, UK CPI, fine. Aussie GDP, Kiwi GDP, very good, fine. These other things are good, like Philly Fed could be a nice little scalp. US CPI and retail sales, yeah, they're good, but this other stuff is just so much gooder. Right? Canadian retail sales and CPI, that's great for the kitty cat, especially to wrap up the week since it's so light for kitty cat, up here. So, but I think everything has to do with these central bank meetings. So if you could pick up 25 or 30 pips on these news smaller, let's say regular news events, that's all good in the hood. Well done. Well played, sir. But holy smoke, some of this other stuff's big. I foresee, sir, a very nice trading week. Let's do some techies, huh? So here's the pig dollar with daily. What does a 4-hour look like? It's already diverging, son. What you gonna do? What you gonna do? Got a pocket full of pips, and my homeboys do too. So, yeah, I mean, it's diverging, right? So, interesting. That's going to be a kick for somebody, but I'm wondering if we should have a head and shoulders going. What do you think? So, to do that, you take the left shoulder, and say you mark it here. On the 4-hour, it's already come down to 21, good, but if it's a head and shoulders, that's going to fail. It will bounce up, and if it does fail, it's going to hit that, and then it's going to come down and test the neckline. I'll make that the neckline. Sort of in here. And therefore, you need to measure the distance from here to, I'm going to do here, and project that down to here. Probably about this. Okay. Don't know, Mark. Be there and trade it if you want. Right? I can't tell you what he's going to say, nor can I tell you what the market's going to do. But if you think it's going to move the market, be there and trade it. If you're not so sure, don't be there, don't trade it. But anyways, if you're trading this 618 and you get a reversal there, the 618 predicts a 1382, and that puts us down at 149. And we're at 55-ish. So 500 to 600 pips on the move. But the nice thing is if we make a low lower than that and a low lower than that, then what it also tells me is we'll come up, then we'll kick off of this area and then drop to probably this area, 145 to 140. Okay, question, do I use MACD? Let's talk about MACD. Let's talk about MACD, baby. Let's talk about you and me. All right, I am going to draw the MACD for you. All right, so let's do this. This is the top of my MACD, and therefore I'm going to need a histogram. Yeah, okay. Okay, so I'm going to start drawing it here. MACD is falling, 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 and then it's narrowing, 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 and then about here it goes like this, and then it goes up, 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 and it's still kind of going up about here. Okay, I just drew the MACD. Look at that, I can do the math in my head. So take a picture. If you want, I'll take a picture. All right. I just took a screenshot. Where is it? Did it save it? Too many screens open. Should have saved it. Because I've got this going too. Okay, there it is. All right, so let's add a Miggity MACD insert indicator. I like a 2-line one, so we'll just use that. MACD Osama bin Laden. We'll add it there. Boom. Okay, there's the MACD drawn by the computer. And hang on. I didn't grab a very good shot. God dang it. Wish I could show this in a different way too. Hang on. Hang on, let me try something different. I wonder if it'll let me drag this down. I think I have to save it first. Hang on, sorry. File, save as, style format, JPEG. Sorry. Let's try that. I drag that. All right, that ain't working. So anyways, let me just bring it down. Apologize. I'm trying to line this up so you can see a little bit better. Bring this down. So anyways, I had it going down, 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 then moderately coming up and almost touching the histogram, coming back down, and then crossing the histogram right there, and then heading up and staying elevated. And if I show this one, oh, I have to update my settings here. Input, because I'm measuring the 21 EMA, the 55 EMA, right? Because I'm measuring the market, and I'm doing so over 8 periods. If I'm going to have to get my settings proper, there we go. So there we go. Let's compare now. Down, 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 about here coming up, which you can actually see it pops in. I apologize for not getting a good screenshot. Then coming all the way up and almost hitting the histogram, then coming back down for a while, which it did here, and then right here crossing the histogram, which is right here, and then staying elevated at the top. So within a second or two, usually within a second, I can certainly just see the MACD is without actually having a MACD. But if I had to draw it, it would take me, 3 seconds. So do I use MACD? Yeah, I just don't draw it because I can see it with my mind. Okay. And so how did you do that? Yeah. So the MACD, you can change all you want. So my settings are 21, 55, 8. What are the standard ones that come with MACD? 12, 26, 9. Okay. Do you trade with the 12, 26 EMAs? How many people trade with the 12, 26 EMAs? then why would you have your MACD set at that? That's the point I don't get. Maybe someone, right? Like who? Why would you care? So obviously Gerald Appel, who invented MACD, for some reason liked the 1226. So MACD, all it's doing is essentially looking at the distance between two moving averages over a certain period of time. So Gerald Appel set up MACD to say, look at the 12 EMA, look at the 26 EMA, and compare the two over the last 9 candles. That's what the math is doing. If they're, let's say right here I can see the 21 seems to be slowly getting farther and farther from the 55. They're diverging. The moving average convergence divergence indicator. So they're diverging. They're moving farther apart. And the 21 is below the 55, so it must be bearish. So it's below the histogram and moving farther and farther below the histogram. And then I can see somewhere in this area here, it starts to flatten. So I can tell that's right where the MACD would cross up, but still below the waterline. Oh, I'm one candle off. No, Crimea River. Okay. I can also see when the 21 crosses above the 55, that's exactly when the indicator crosses above the histogram. So that's all the histogram tells you. Out of the two moving averages, did the fast one move above the slow one? If so, you just moved above the histogram. Or did the fast line drop below the slow line? And if it did, it just dropped below the histogram. So I find it funny where lots of people like to use these indicators, but they don't know what they're telling them. They just have no idea. They're just like, So I use MACD, and I have custom settings, 2155, because I use the 2155 EMAs. Why would I use a MACD with some stupid moving averages that I don't care about? That mattered to Gerald Appel. His strategy must have used the 1226. Well, I don't use the 1226. Okay, Bollinger Bands. All of this stuff is super easy, guys. Bollinger Bands tell you volatility. I can look at the Bollinger Bands right now and tell you not many people are trading. So maybe I shouldn't be trading so much either. Okay? So anyways, guys, the moving average convergence divergence indicator is important, but I changed mine to suit my needs because I like to use the 2155. I'll measure it over 8 periods, and I want to know, are they getting closer together or farther apart? That's all. And almost always I can tell just by looking, so I don't even need to waste my space. Why take up my valuable real estate? Now, Stochastics, it measures price action, okay, over the recent time. It's measuring price's ability to make lower lows. Okay? And all of a sudden, whoa! See right in here? Much more significant change in trend. Stokes moving up here. Because we went 1, 2, 3, 4, 5 candles without making a low. Okay? That's what it's looking at, and vice versa. That's all it's measuring. So for example, okay, right, lower low, started moving down in here, right, lower high, lower low, lower high, lower low, everything's good. And then no low, no low, no low, no low. So right in here, it must be moving upward. Higher high, higher low, higher high, right? Higher low. Uh-oh, right? Little problem in here, little high. So you can see it kind of is wimping out and diverging. So you can use it as a price action style indicator if you want. Oops. Okay. But I use it in such a way, well, I use it as a price action indicator on the smaller time frames, like a 5-minute. We're looking at a 4-hour. It's still just as accurate. But on a 4-hour, the way I use it is I look at it almost like a real-time COT report. Because we use COT reports, if price is going up but nobody's buying, it tells me it's not really a bullish market. Well, I kind of look at it like the market here is bullish, okay? It's definitely bullish, yet we have an oscillator like this. And what it tells me is, yes, it's bullish. It's definitely not bearish. It's just a lot less bullish than it was before. And I read into it and say, bulls, ones that bought the bottom down here, are starting to take profit up here, and they're scaling out of their positions. It's not bearish, but we have a lot less bulls. You see? And it's like saying, well, right, that in here, price went up, this, over the course of 12 hours went up, but nobody was buying. So maybe those that shorted here got taken out. But it kind of looks like, yeah, no one's buying. People might just start getting out of their longs. Okay? That's how I kind of look at it. Okay, so Mark says, why do I use 853? Because I use 5-8 cross over. Okay. So I'm measuring price action. I'm measuring this, the 5 and the 8. I'm measuring this, the 5 and the 8. Okay. Notice how the Stokes tells me before. Stokes is giving me like a heads up. Cool, huh? So a little impromptu MACD stochastics overview. See, that's why I like you guys asking questions. So I was just talking about, I think there's a potential for this to come down, but I was clear this must go up. If you don't think it's going to go up, then why do you have it plotted on your chart? The 21's in control. You might have seen me, I think maybe at FX Street, I talked about it, and I said, if price is above that 21, I'm a bull, and there's nothing you can do about it. Okay? So it's going to go up, but if you're a bear and you believe there's going to be a pretty good chance of a head and shoulders, then you have to let it rise, and then you sell. You'd be a fool to sell at that 21. And that's why I said, just, with certainty, it's going to go up here. So get ready to short it. Yeah, so Ron says he likes the idea of the real-time COT. Yeah, absolutely. So that's how I look at divergence. Okay? So what I'm looking at here is the divergence. Nobody's shorting, but there's a lot less bulls. So I can almost draw like the COT data, right? The COT, like how many people are, let's do a line for the, it's a gray line, right? Well, I guess I can only do a black line, but long positions, right? Long would be less people long. So it was like this, and then it's starting to do this. And right now, if you want to see those that are short, let's say short is in red, it looks like this. Okay, no one's really shorting. But what do you think is going to happen if it does head and shoulder? Then this is going to go whoop. A lot more people are going to be short. And even less people are going to be long. Okay? How do you spot a real reversal? Okay, let's do that. Lots of good questions today. Thank you for coming prepared. Let's do it this way. I don't need this so much. By the way, this does say prepare for a real reversal. So now what you do is let's highlight where you think the reversal is going to be. That's called a trade plan. What would your reasons be? Look for pivot points, look for psych levels, look for price action levels, like the left of shoulder would predict the right shoulder. That kind of stuff. Drop into a smaller time frame. And if price got up to our area, you know what, maybe just to make it a little easier to see, let's do it this way. Oops. Let's do it that way. Okay. All right, so now we drop into like a 15-minute chart. Use our oscillator now, which is measuring what? Price action around the recent candles. It's not measuring the angle and separation between the 5/8, okay, but it's just comparing these averages. So if we can get up near the red zone, what do I do? If up near here, what do I do? Well, the first thing I want to look at is the oscillator on the 15-minute. Is it overbought? Right, and that just gives permission. So in that case, I would like the oscillator to be like way up here, and maybe even showing some weakness. At that point, I will then drop into a 5-minute. And I will look for the exact same thing, a way elevated oscillator up high. Okay, I want an oscillator up around 80 or 90% overbought. Okay, not an oscillator like this. This does not say short. Okay, if I was a bull, that says long. If I'm a bear, it says nothing. Okay, so if I'm already looked short and it's 90%, that gives me the green light. And I will then look for 5/8 cross down. Okay? And if you're a real eager beaver, you'll take that and you'll go even further. As soon as you get above the 80% line on the stochastics on the 5-minute chart, you move over to the 1-minute chart and take the 1-minute oscillator rollover on the 1 minute, or a 1 cross down like that. How does that sound? That's to answer Eric's question, how do you spot a real reversal? That's how you do it. You start with the commitment of traders report, then you look at the daily oscillator, you look at the 4-hour divergence, you look at a 15-minute cycle, proper time of day like pre-London or New York Open, set up the oscillator on the 5-minute, drop a 5-8 cross on the 1 minute, it's real. Yeah, I guess so, Ron. But I've been teaching that for, I don't know, as long as I can remember. It's probably in my book. I don't even know, but yeah. I don't think I ever called it a real-time COT before, though, but yeah. Yeah, as far as that part, but trade strategy is the same. You want to see a trade from earlier today? Where's my screenshot? Okay. So if you look at the name of the file, June 15th, hang on, let's do it. It's this one. Sorry. How do I get it to show it? Okay, you see at the bottom there, 6/15/15, right? 6/15/2015. Today at 3:27 a.m. What were you doing at 3:30 in the morning? Come on, guys, what were you doing at 3:30 in the morning? Yeah, that's what I do. It was nice and fun. Let me give you a little bit more to see. So this is Euro USD. 5-minute chart. Okay. So you can see we've retraced over in here to the top of the gap. You see this? That's what I'm looking at. So that's one part of my strategy. My gap fill strategy is let the gap fill and then have the then continue mission. In this case, it's been a downtrend, right? So that's the first part. Second of all, I need resistance that a blind man can see. Today, this just happened to be the daily central pivot point and a weekly central pivot point, which you can't quite see there, but it's a perfect cluster. Okay, I'm short here. You can see like right on the pivot. Hoo-ha! And my stop is up here, as you can see. So that's the plan. Let's go Euro USD. YJ, are you still in it? What are you talking about? Boo! that sucks. Yeah. Yeah, what do you do? It's one of those days. So let's look at it here. So the short was right here, if you recall. Spiked up a little higher, came down, made a 1, 2, 3, did the retest, dropped down to the 3.8 Fibonacci retracement of yesterday's trading range, and smoked YJ out of his position. I think YJ was short. Where were you short, dude? Down here, I guess. He posted his trade. Oh! So where did you take out? You got up. Oh man. So I actually took a 6-pip loss on this, guys. I was all happy on this, and then it did this. Was that part of my trade plan? My trade plan was to sell it off the weekly and daily central pivots, and then have it spike up all the way up to here? No. So came back, and I got out. Just above break even, like 6 pips, maybe 5 pip loss. And then sure enough, it spiked up a little longer, and then spiked down, then up, and then down and stuff. But, you know, I know it was a wimpy exit, but this was not part of my plan. I didn't say, like, have it jump 25 pips and then drop. Otherwise, I would have shorted up higher, right? So it's just like, you know, I wasn't going to throw away 30 pips out of hope. Could have stayed in, but why? Why do I need to stay in, right? Yeah, I always hit the shower right around then. You know, I probably should have, but, you know, my stop, if you recall, here, I'll show you. My stop was, where was it, 65, something like that. So my stop was about here for what, 25 or 30 pips, not quite 30, 26 pips, I don't know, something like that. So I thought, you know, I came down here and I got out basically break even, right? Now, I'll show you also, let's go back to the moment. It came all the way down, hit the cluster of daily and weekly central pivot point after making a higher high. What would a bull do here, guys? That's where they should buy, right? So what? All of this stuff's hindsight, right? Don't even look at that nonsense. A bull should buy here. So I got out, and I think that's the discipline part. I got out -6. Can I recover from a 6 pip loss? Or am I devastated for the day? Yeah, so, but how does it feel to just sit here and watch this go up and knock you off for 35 or 30 pip loss, even though it had come back to basically break even, and you started hoping or something, whatever goes through your mind, right? And then you watch it go up and wipe you out completely. How does it feel money-wise? Well, you know, you can't have too many, let's say, 33 pip losers in a day before it's a pretty bad day, right? You know, one loss like that is tolerable. 2 is pretty bad day. 3 is way out. You see what I mean? So if I had an opportunity, and this was what was going through my mind, if I was a buyer, I would have bought there, hardcore, man. Not a problem. I'd do that all day, every day. Okay? Because here's how London started. Higher high, higher low, higher high, higher low, higher high, higher low. Okay? That should have been a buy for somebody. So I decide I'm basically going to take my money and walk. A tiny, tiny loss. Basically a rounding error. Nobody cares about the -6, right? Yeah, the one to, yeah, well, yeah, he's saying this is the 1, 2, 3 coming down, which is a correction area, right? So this was the bigger part of my trade plan, but I should have shorted at the 50, okay? Also, something else bothered me. I'm just trying to be as open as possible so that you can, I don't know, learn from my successes as well as my failures. Is that okay? I'm just trying to like take you through like the thought process of what I was thinking at the time, right? The other thing I was thinking about is I should have been in on this. I should have been long. And I just wasn't awake yet. You know, my alarm didn't go off right or whatever. Blah, 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 blah. So I was, I'll tell you what, I remember now exactly. If you zoom in here, I woke up and got to my chart, fired up my chart, exactly, and this is a, yeah, 5-minute chart. It was like here. Okay, and it had just finished this candle, and then I watched this one go up, 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 and I was just, if I was awake a half an hour earlier, you know, I might have been playing this. Because I'll tell you, let me change it to an hourly chart now. Watch the hourly Stokes. You ready? Boop. Okay. And that move was 70 pips, if I remember correctly. Let's go back. Yeah, the range for the London session is 70 pips. Okay. The low and the high. And I should have, could have, maybe should have kicked off the 112. I mean, if you see the 112, kind of bottomish, 5-minute Stokes, hourly Stokes, that's an easy trade. So here I am short, which I'm fine here, but I'm like, but I just made a high. Okay, I get it. I got it, filled the gap, great. Got the daily and weekly central, great. I was short, as you saw, just like I wanted to, and then I'm up here. And I'm like, that's not good. Right? That's not good. So, comes down, and I'm like, you know what? I'm going to take a walk. Give me my money back, Mr. Broker. All right. So I tell the dealing desk, close out Euro USD trade. Okay. And I look at it as like get out of jail free card. Right? To try again. Poor YJ just got wiped out here. Nothing but the crying. Do you use trailing stops? I hate trailing stops. Yeah, absolutely despise them. It's like the tool for those with failed trade management practices. It's one that automatically moves. I mean, they're executed differently by different brokers, but just let's say as you move in profit, your stop follows along with it. Now, some say, like, if you have a 30 pip stop, some brokers wait, and every time you make 30 pips, the stop jumps 30 pips. I've had, back when I used GFT, 800 years ago, theirs was interesting because a 30 pip trailing stop would be executed in such a way that your stop would be 30 pips away from your entry, and then if your order went up 1 pip profit, then your stop would move closer 1 pip profit, so now it's minus 29. And it would make down, it would go. So suddenly it'd be great if you had a trade and all of a sudden you hear this, the sound of your stop moving over and over and over again every few seconds. You're just like, yeah, making the money. But for example, if you say I want to have a 30 pip trailing stop, what you're telling your trade, what you're setting up in your trade is, I'm willing to throw away 30 pips because I can't manage my stop properly. I can't manage my trade properly. So I'd rather you manage it in such a way that you move your stop and move your limit and all that kind of stuff manually, and you make decisions as you go. So for example, if you hit weekly S2, you take profit no matter where your stop is. Okay? So it's just Bob, it's just an opinion. I don't know if you share that or not. But I like, so very often when I'm in a trade, I'd say in the first 20 minutes I've probably moved my stop twice. Okay? And then once I get my stop to break even, I generally go look for another trade. I just totally forget about it. Yeah, there's various versions of it, Johnny G. Sure. But like if you're a portfolio trader now, your intention is never to take profit. So in that scenario, I would move my stop to -1, and I'd never get out. So let's say I'm short Euro USD, and I shorted today at 112.50. I suppose now that we've formed a lower high, I'd move my stop to break even, or sorry, -1, and I'd never touch it again until we get to 80. So I'd be short till next summer, certainly to Christmas. Or I lose 1 pip. And once I have that locked in, I go find another trade. And another, 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 another. And at the end of the year, I got 70 trades open, all with basically break even. And I cash out with 52,000 pips. Okay, what do I think about partial closing? We typically call that scaling. And I said many, many years ago that scaling's for fishermen. If you're so scared, why don't you just manage the trade? See, because it's one of these things like, oh, well, we're getting to resistance. I'll take half my profit now, and I'll throw the other half away. Like, look, if it's resistance and you're long, get out. What's your problem? Oh, well, it might go higher. Who cares if it might go higher? Might what? If you're at resistance and you see and perceive an increase in risk, get out. Take your money. You're probably right. Right? Hope is not a strategy, guys. Yeah, okay? You have to understand that. Hope is not a strategy. Oh, I'm at clear resistance. Even a blind man can see, but it might break. Rubbish. Take your profits. Because, you know, play the laws of average. Play the law of averages. If you're at hardcore resistance, a blind man can see, and you're in a long position, and you're profitable, what percentage of the time is that hardcore resistance going to dramatically affect price? What percentage of the time? Most of the time. But some of the time, it'll break anyway. Forget about it. Just play the law of averages. Take your money, don't worry about it. Because more often than not, you're going to give away more than you ever make on the chance of that it does break. More often than not, you'll save your money by taking your profit. And that takes discipline, guys. When I say patience and discipline, half the time, you know, we're thinking two different things. Discipline is to be at hardcore resistance, and you're sitting on a profitable trade, and you do what's right. And sometimes doing what is right is difficult, especially if it moved quickly. You're like, oh my gosh, I made these 75 pips like in less than an hour. Yeah? Why does that change anything? Are you at resistance a blind man can see? Yes. Take your money. Find another trade. Oh, but it could go higher. Well, there's no glory in Forex, guys. If you're trading other people's money, they don't see it. All they see is the amount of pips you made. So if you're up 75 pips, you're at resistance, take your money, don't worry about it. There'll be another trade, guys. It's not the last trade of your life, is it? Okay? Yeah, Johnny G, we already knew that like 4 months ago. We discussed all that before the IMF report in April. So we were talking about that in March. He said the same thing in March, Johnny G. March. It's middle of June. But a lot of people are just getting on the clue train now. It's very interesting. So we'll see what happens there over time. Yeah, we'll give it time, Johnny G. It'll set. Well, he's part of the team now, I hope. Johnny G's part of the team now. So anyways, all I'm saying, Johnny, is that's not new news. He's been saying it all along. Yeah. So anyways, welcome to the team, Johnny G. I'm glad when people participate and share, get involved. It's the right thing to do. So thumbs up, dude. Thank you, Johnny G. Yipper. Hey, guys, I went on and on and on and on and on today, but, you know, I like hanging with you. What can I say? Thank you for being a client of TradersWay. Thank you for being on my team. You keep me sharp. You keep me focused. You make me want to wake up at 2 o'clock in the morning because you're on my mind and I'm thinking about you while I dream. And then I wake up and I'm like, Johnny G's going to be in the room today. I better get up and do my homework. So look, a lot of people say, hey, Wayne, when I'm hanging with you, the analysis and trading just seems easy. Well, it's only because I do this 20 hours a day. Did you guys read the government of Japan's economic outlook that was released today? Oh my gosh, let me get you a link for that before I end it. Hang on. These are the things that I do at 2 o'clock in the morning, right? I'm doing trade analysis, I'm putting in trades. I don't know if I have it anymore. I have too many windows open. Was it the Ministry of Economics, I think, out of Japan? Hang on. Is that it? Japan Economic Summary. Is that it? OECD. Let me tell you if it's the right one. Yeah, I guess so. Yeah, it's really short. Yep, that looks pretty good. I read it somewhere else. This is the OECD version. I actually read it on the Ministry of Economics, I think it's called, the MOE.jp or something like that. But anyways, yeah, so that's what you should be doing at 2 o'clock in the morning. If you're not doing that at 2 o'clock in the morning, someone else is beating you. Hoo-ha! But I'll never take pips from you. I'm only here to inspire. So peace on earth, may the pips be with you, may your profits be above average. I hope to see you tomorrow. Will you be there? Remember, I'm going to drop you on our youtube.com/c/TradersWay channel. I'm uploading this video now for your viewing pleasure in the future. If you could go to our last video and leave a comment or a like, it's greatly appreciated. Take care of yourself.